The real key here is this is a very pro-crypto, pro-digital assets, pro-Bitcoin political environment. There's no reason to think that will change in the next 4 years. And what's 4 years mean? Well, we've added about $2 trillion to the crypto economy in a few months. From November, we went from 2 trillion to 4 trillion or something. I would think that we're staring at a 10 to 20 trillion dollar industry by 2028. The genie is not going to go back in the bottle. There's no way you put a $20 trillion industry. You got 40, 50 million Americans that own this right now. Give it 4 years with the flow into 401ks and retirements. Substantially I will go out on the limb and say, substantially every American with assets is going to own some amount of crypto exposure, and they're going to own some decent piece of Bitcoin by 2028. I find it hard to imagine where it will be hard for them not to. You know, the CEO of Vanguard became very famous for saying he didn't think Bitcoin was an asset, it didn't generate cash flows, and they wouldn't let their clients buy it. Do you know who the largest shareholder is of my company? Vanguard. Okay, so you think about that a little bit, right? Kind of hard to stop an idea whose time has come. States are embracing it, and governments are embracing it. This is just going to get louder. And the crypto industry in general, it went from a lot of infighting to being largely aligned at this point, and I think there's an appreciation amongst the crypto networks, the token, the DeFi, the crypto exchanges, the Bitcoin advocates, that the entire industry is better cooperating with each other than they are fighting with each other. And following November, I saw a remarkable alignment of interest and a coalescence of a formation of a coalition. This coalition, the entire crypto industry, is probably the most powerful political actor in the space right now, because they can marshal something like 50 million voters, and they're just so distributed and diffuse in their influence, and also very aggressive in driving this forward. So the entire industry has become very politically active. Right, as you can imagine, I'm bullish on Bitcoin. I'm bullish on the entire crypto industry. I'm bullish on digital assets, and I think that there's a surge globally, worldwide, and there really isn't. I don't see any organized resistance at this point. Right, there are just various degrees of bullishness at this point. People that don't have anything good to say generally just say nothing at all. They've learned not to walk in front of this truck. There's no upside in standing against this. So I think it's just about the most positive environment that we have seen in the history of the industry. Now, what is our company? We are a new class of company, a treasury company. Now, what's challenging for people is wrapping their head around a Bitcoin treasury company, and that's because Bitcoin is a new asset class and treasury company is a new corporate type. Now, why is it what is Bitcoin? Bitcoin is the first digital capital. It's the first perfect money. Well, we never had perfect money in 10,000 years of economic history. The Austrians never saw it. The libertarians never saw it. The political scientists never saw it. You can't blame them for not factoring into their thinking. They just never saw it because it was impossible to create until you had semiconductors, public-private key cryptography, and the internet. So Satoshi, like Galileo, Galileo came up with a telescope. We have a telescope, and all of a sudden the Copernican revolution is afoot. Well, we needed Bitcoin for there to be that monetary or capital revolution, and that's what Bitcoin is. And most of the world still doesn't get it, but that's good, because the way that you make 10 to 100x your money is to figure something out while the majority of the world doesn't agree with you or doesn't get it. When they all agree with you, it'll be a not good investment. It'll be a mainstream investment. You need to be right, but you need to be just early enough that 95% of the people think you're wrong. That's how you make obscene amounts of money. So, I mean, that's Bitcoin. But we put together two novel ideas. Treasury company. What is a treasury company? It's a company that accumulates capital and then issues securities against the capital, especially issuing credit, right? What do? We're selling credit, right? What does a bank do? A bank buys credit. A bank is basically buying your mortgage. We are reversing it. We are creating securitized Bitcoin. We're selling an annuity. When you buy Stretch, which is like a 10% annuity, we're selling you the annuity, or you buy Strife, we'll give you 10% at par forever, and you're buying it from us. Now, how are we promising to give you a dividend for 100 years? That's a long duration liability. We need a long duration asset. So Bitcoin is a long duration asset, right? You would want to hold it for a decade. It's high volatility. It's long, call it 120-month duration, 50 vol, 50 ARR. It's a very powerful financial asset, but most of the world doesn't want 120 months of duration, and they don't want 50 vol, and they don't want years where they get nothing and years where this year we got 100%. They don't want that. So a treasury company sits between that uncertain, long duration, highly volatile, high energy future crypto economy, and they strip it down and they give you a 1 month duration, 10% yield, low vol, low risk financial instrument out the other end. You're securitizing digital capital or securitizing digital property. Why isn't there a Magnificent Seven treasury company? Why can't you do this with Apple and Tesla? It's because the SEC 40 Act made any company holding more than 40% of its liquid assets on its balance sheet an investment company. You cannot lever 100% or 150% the balance sheet of a publicly traded company in the United States with securities. There is no S&P treasury company. There is no Mag 7 treasury company. There is no Tesla treasury company. Would there be a market for it? If it was legal, absolutely. What I'm doing, what we've done, you could do with the S&P, but the challenge is not in the current regulatory environment. So public companies since 1940, call it, for the last 85 years, they have had to either surrender their capital, they can give it back as a dividend. There's only one security that Apple can buy, one security. It's called Apple. They can buy their own security. They can buy back their stock. They can dividend out their stock. They can hold short-dated treasuries, money markets, or 1 month treasuries, or sovereign debt. They could buy real estate or gold, but that's illiquid. Or they can do some acquisition. But you see, what makes treasury companies possible is the creation of a commodity, because you can hold 150% in commodities or 100%. A commodity that outperforms the S&P, that is the magic trick. Like, I can create a digital commodity that's garbage. If I were to inflate Bitcoin 27% a year, every year ad infinitum, it would be a commodity, but it wouldn't be a good investment. The world's full of commodities that are bad investments. In fact, arguably every commodity other than gold has been a bad investment over the long term, over 10 years. So you need a commodity. It needs to outperform the S&P, and then you need to be able to lever a public company. Okay, so when did you know for sure that was going to work? Well, arguably after November 5th. Right? So the reason this is exploding is because you had to be a believer in August of 2020, but all you have to do is be a reader. You just need to read the press and listen to what people are saying in the last 9 months to know that you can actually do this. And a public company levered on a commodity can arbitrage the return of the commodity versus the cost of credit or the cost of equity. And you can do it in an almost, I'm not going to say risk-free, a very low-risk way. The most intelligent way to generate leverage on a good idea is a public company issuing instruments like preferred shares. or some kind of long-dated public debt. It's a much better idea than, say, a margin loan from your local crypto exchange. So we've raised $47 billion of capital over that time frame, most of it equity. A little bit convertible bonds, and about $6 billion is preferred equity. And you can see it's every single quarter we're building up. We have a little bit more than 3% of all the Bitcoin in existence. Clearly, we believe in the network. We're basically ratcheting the network up. As we buy Bitcoin, we take it out of circulation, and then the price has got to move up so that people can find a willing seller at a much higher price. Now, these are all the greatest companies in the world. We have come out of nowhere in 5 years to be the 5th largest treasury in the entire S&P. Why? Because we are positively polarized to capital. They are negatively polarized to capital. If you talk to the CFO of any of those companies, with the exception of one, Berkshire Hathaway, the only company on this chart where the guy that runs it would say, I'm going to keep my capital and invest it for the good of my shareholders, is Warren Buffett at Berkshire. Everybody else would say, we're going to return the capital to the shareholders. We have a capital return program. We're raising the dividend. We're raising the buyback. And they crow about it like it's some achievement. But I hear them say it, and what I think in my mind is they're saying, we have no frickin' clue what to do with the money. We don't have any idea, and so we're just going to give it back to you. You figure it out. Why do companies die? Why do you have a 10 to 15-year life expectancy for a corporation? It's because of their financial practice. It's because they're surrendering their capital as fast as they can. If I bled you to death, you would die quicker. Like if I showed up at family, Thanksgiving dinner and I said, I have a great idea for the family. Let's give away all of our money so that our balance sheet isn't volatile. I mean, that's kind of what's happening here. And you'd be like, okay, well, great. I guess someone else will figure out what to do with all of our money. But what if our family needs the money? Don't worry, we'll just work harder, raise our prices, and cut our salaries to our employees if we need the money. So that's not a good idea. And the real revolution here is, what if we actually replace share buybacks with Bitcoin buys? What if we actually stopped dividending out the cash flows? What if we reinvested the cash flows? You're like, well, I can't do it in money markets. You're right, you can't. What can you do it in? You need something that outperforms the cost of capital. If you find that if I can return more than the cost of capital, I can in theory raise infinite money. If I return less than the cost of capital, I can in theory raise no money, right? I'm either beating the cost, I'll give you infinite, or I'm underperforming, I'll give you nothing. All these companies have chosen a balance sheet strategy to underperform, and therefore they deserve nothing. They have to give it all away, right? They're just levering themselves until they're $20, $30, $40 of enterprise value for $1 tangible assets. What happens if you have a bad quarter? Well, you know what happens. Stock crashes. But right now, we're literally siphoning up the capital that's being pushed into the economy by them. We did 4 IPOs this year, and we did the biggest IPO, which was Stretch a few weeks ago. And, well-run companies only do 1 IPO. My first IPO was like $35, $40 million, right? And it was pretty hard. This one was really easy, right? And of course, the irony is, what would happen if a Tesla, or what would happen if an Apple or a Microsoft did an IPO today? Right? It would be massive, but they're not doing that, right? Again, they're not in the business of issuing securities. They're in the business of buying them back. This chart probably is the most important chart I'm going to show you today. If you just bear down on it, the cost of capital for the past 5 years is 14%. That's the S&P. Long-dated bonds are minus 4%. That's why every bank was in trouble financially when the Fed raised interest rates. If you had short-dated money like money markets, you're probably getting 2%. If the cost of capital is 14, then all the capital you hold is minus 12% real yield. You're destroying 12% of your treasury a year. That means in 5 years, right? Cut it in half. Bitcoin is 55%. You know, the Mag 7 is double the S&P, Bitcoin's double that, and our company's, you know, about 80% more. But what's the opportunity here? Well, the opportunity is you fund your company with the cost of credit down here or with the cost of equity, and then you invest it into the digital ecosystem, into Bitcoin, and you just grab the spread. And you can do that effectively risk-free.